All right, let's look at exercise 7 in your text. Here we're still doing some practice with estimating bad debts and writing off bad debts using the allowance method. So here we're going to use percentage of receivables in this example. Here it says we have the accounts receivable balance for Clark Company at December 31st, 2014 was $18,000. And it says during 2015, they earned revenue of $447,000 on account and collected $324,000 of that. Clark wrote off 5,000 receivables as uncollectible, and industry experience suggests that uncollectible accounts will amount to 2% of accounts receivable. So this is the 2% of total accounts receivable. And here it's saying that assume Clark had a $2,400 credit balance in the allowance for bad debts at December 31st. Journalize the adjustment to record bad debt expense using the percentage of receivables. So when we use percent of receivables in the aging method, we are estimating in total of the receivables how much we don't think we're going to collect. And that estimate number is what we want that allowance account to be. So let's look at, this is going to be my allowance for bad debts. So here it said that they started off with a credit balance of $2,400. All right, and then let's see what we want our estimate to be. We have to figure out first how much we have in accounts receivable before we can do the 2%. So it says that they had a balance of $18,000 and they earned revenue of $447,000. So that's an addition. And they collected $324,000. And they wrote off 5,000 of the receivables. So that's a reduction. And let's see, what does that give us? We've got a total here of $465,000, and we want to subtract out the $324,000 and the 5,000. That means we have a balance at December 31st of $136. So we want 2% of that is what we estimate is going to be bad debts. So 136 times 2%, and that's going to be what we estimate of this we don't think we're going to collect. So 2% of that is $2,720. So that is what we want the allowance account to be. So that's the balance that we want that to be. So to get the allowance for bad debt accounts to be $2,720, we have to do a credit entry of the difference. So that's $320. So we're going to take $2,720 minus the $2,400. That equals $300 in bad debt expense. All right, so then now we're going to debit bad debt expense, 300, and credit that allowance for bad debts, of 300. All right, so that's the first one. Now 2 says assume that they have a $2,000 debit balance in the allowance for bad debts. Then what would the journal entry need to be? Well, let's look at that T account and put it down here and make some adjustments. So now it says what if they had a debit balance of $2,000? Well, we still want the balance to be $2,720, and when we calculate that amount, it's always going to be on the credit side because that's the normal balance of this account. So then not only do we need a debit of $2,000 to get it to be 0, we need the $2,720 as well. So we're going to need to make a journal entry of $2,000 plus the $2,720. So we're going to need a total of $4,720 entry. Right? So we're going to debit the bad debt expense, $2,720, and credit the allowance for bad debts, $2,720. okay? And that's going to get us to the same balance that we were looking for, all right? If you have any questions, post your questions to the discussion board or send me an email. Now let's